Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. I'm going to give you an updated Intel stock analysis today and explain why I'm staying away from Intel stock no matter how cheap Intel stock is. At the time of making this video, Intel stock is at a 5-year low. Intel stock is down more than 50% from the most recent peak. The only positive thing about Intel is that it has a very high dividend yield. Intel's forward dividend yield is at 4%. In comparison, Intel's two biggest competitors, AMD and TSMC, had done a much better job in the past 5 years. For example, in the past 5 years, both AMD and TSMC had outperformed Intel stock substantially. Intel has fallen behind AMD and TSMC because of Intel's execution issues and because TSMC has surpassed Intel in process technologies and mass manufacturing of leading-edge chips. So in this video, I'm going to talk about whether Intel stock is a value trap. I will explain why I'm not investing in Intel stock no matter how cheap Intel stock is. I will talk about these topics in this video. First, Intel's 3 major risks going forward. Second, can Intel turn around within 5 years? Third, is Intel stock a value trap? And fourth, what is my investing strategy going forward? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. Intel's first major risk is intense competition with AMD and TSMC. AMD is Intel's biggest competitor in the client computing business and data center business. TSMC is Intel's biggest competitor in the foundry business. Intel also competes with other companies such as Apple that make ARM-based processors. In recent years, many cloud providers such as Amazon had started making their ARM-based server processors that are more efficient than Intel's x86 server processors in certain workloads. NVIDIA will be releasing their ARM-based Grace CPU that is designed for large AI applications, high-performance computing, cloud services, and other hyperscale applications. Going forward, Intel will be facing a lot more competition from AMD, TSMC, and all the companies that are making ARM-based processors. If you have been following Intel's quarterly earnings, you will notice that Intel has been losing a lot of revenues and market shares to AMD in the two most important businesses, client computing business and data center business. For example, this is from the most recent earnings. Intel's total revenue was down 17% year over year. Its gross margin decreased to 44.8%. Its earnings per share was down 79% year over year. Its client computing business revenue was down 25% year over year, and its data center business revenue was down 16% year over year. Now, Intel expects that its full-year revenue will decrease by 9% to 13% year over year. Intel has two new business groups: accelerated computing GPU business, which competes with AMD and NVIDIA, and Intel Foundry Services chip manufacturing business, which competes with TSMC and Samsung. If you look at this here, you can see both businesses lost even more money during the quarter. During this quarter, only Intel's network and edge business reported high revenue year over year. Also, Intel's autonomous driving business, Mobility, reported much higher revenue and operating income year over year. But these two businesses' revenue growth is obviously not enough to offset Intel's large decline in other businesses. I want to show you this. It shows that Intel has major execution issues compared to AMD. In my opinion, AMD's management is doing a much better job executing their product roadmap, releasing more competitive products on time, and taking more market shares from Intel, especially in the client computing business and data center business. This is from the most recent earnings. During the same period as Intel, AMD's total revenue grew 70% year over year. AMD's gross margin increased to 54%, which is higher than Intel's gross margin of 44.8%. Both AMD's operating income and earnings per share increased significantly, while Intel's earnings per share actually decreased 79% during the same period. If you look at this here, you can see all of AMD's businesses grew significantly compared to last year. For example, AMD's client computing business revenue grew 25% year over year. Its data center business revenue grew 83% year over year. This shows that AMD has been taking a lot of market shares and revenues from Intel in both client computing business and data center business. AMD faces the same macro headwinds as Intel, but AMD's management is doing a much better job managing supply chain issues, executing their product roadmap on time, and releasing better and more competitive products. This means execution is Intel's biggest issue, not so much the macro headwinds that all the semiconductor companies are facing now. This is from Morningstar. Intel has lost about 10 percentage point of PC CPU market share to AMD, from 90% in 2018 to 80% share in the first half of 2022. In server CPUs, AMD's share has gone from 2% in 2018 to about 15% in the first half of 2022. We also believe Intel has conceded on price to prevent this share loss from becoming even worse. In the x86 CPU market, there are only two major players, Intel and AMD. According to this article here, you can see AMD has been gaining more market shares for many quarters in the x86 CPU market. This means Intel has been losing x86 market shares to AMD in the desktop CPU market, mobile notebook CPU market, and more importantly, the server CPU market. In the server market, Intel competes with AMD's x86 server chips and companies such as Amazon Web Services that make ARM-based processors. According to this article here, you can see Intel's server market share has been declining for many quarters already. In comparison, AMD and ARM-based processors have been getting more market shares from Intel for many quarters already. This shows that Intel no longer has a monopoly in the x86 CPU market and in the server market. Another major risk is this: Intel is facing many macro headwinds that will continue to impact Intel's client computing business and data center business for at least the next several quarters throughout 2022 and 2023. Intel expects that the PC total addressable market will decline about 10% in 2022 because of many macro headwinds. For example, these macro headwinds include the current supply chain issues, lower PC sales, lower PC demand, high inflation, high energy prices, high interest rates, economic downturn in the upcoming quarters, and PC vendors reducing their inventory because of lower PC demand. This from the latest Gartner's research report explains that the overall semiconductor market is expected to slow down significantly in 2022 and 2023. This will impact Intel's businesses going forward. PC shipments are set to decline by 13.1% in 2022. After recording growth in 2020 and 2021, semiconductor revenue from PCs is estimated to record a decline of 5.4% in 2022. Global semiconductor revenue is projected to grow 7.4% in 2022, down from 2021 growth of 26.3%. Although chip shortages are abating, the global semiconductor market is entering a period of weakness, which will persist through 2023 when semiconductor revenue is projected to decline 2.5%. We are already seeing weakness in semiconductor end markets, especially those exposed to consumer spending. Rising inflation, taxes, and interest rates, together with higher energy and fuel costs, are putting pressure on consumer disposable income. This is affecting spending on electronic products such as PCs and smartphones. The semiconductor market is entering an industry down cycle, which is not new and has happened many times before. While the consumer space will slow down, semiconductor revenue from the data center market will remain resilient for longer, 20% growth in 2022, due to continued cloud infrastructure investment. In addition, the automotive electronics segment will continue to record double-digit growth over the next 3 years as semiconductor content per vehicle will increase due to the transition to electric and autonomous vehicles. I believe Intel's third biggest risk is a potential dividend cut in the upcoming quarters in 2023 or later if Intel continues to have negative free cash flow and large CAPEX every quarter. For example, for the full year of 2022, Intel is expected to spend about $23 billion in capital expenditures (CAPEX), or 35% of total revenue. Intel is paying about $6 billion in dividends annually. This means Intel's operating cash flow will need to be at least $29 billion each year if Intel wants to maintain the same dividends and still invest about $23 billion or more in CAPEX every year. Here's the important part. If you look at Intel's financials here, Intel's operating cash flow was only $22.5 billion in the past 12 months. I believe it will be very hard for Intel to maintain the same dividends going forward because Intel will need to spend more money on CAPEX to build its foundry business, build more leading-edge fabs in the US and Europe, and compete with TSMC and Samsung in chip manufacturing. Also, Intel no longer has consistent free cash flow as before because Intel needs to spend a lot more on CAPEX and fab expansion going forward. For example, Intel had a negative free cash flow of $1.583 billion in the past 4 quarters. Also, Intel expects that they will have a negative free cash flow of $2 billion for the full year of 2022. The $52.7 billion subsidies from the US CHIPS Act will benefit Intel the most, but it will not be enough to fund all of Intel's fab expansion in the US. Based on what I know, each leading-edge semiconductor fabrication plant can easily cost between $10 to $20 billion. For Intel to maintain the same dividend payout and invest in leading-edge fabs in the US and Europe, Intel will need to use more debt or rely on more external financing from outside partners partners such as Brookfield Asset Management. For example, Intel recently reached an agreement with Brookfield Asset Management to jointly invest up to $30 billion in Intel's 2 leading-edge chip factories in Arizona. Intel will retain 51% ownership and operational control over the 2 new leading-edge chip factories in Arizona, while Brookfield Asset Management will have 49% ownership. This is from the Wall Street Journal. The move will preserve cash to help Intel continue paying dividends and will obviate the need to rely more on borrowing to fund its expansion, which could dent the company's creditworthiness. The company eventually aims to offset 20% to 30% of its capital spending, which is expected to reach $23 billion this year through co-investments, government support, and prepayments for chip-making capacity. Going forward, Intel will need more external financing from other companies such as Brookfield Asset Management to expand its foundries in the US and Europe. Otherwise, Intel will eventually need to cut dividends because Intel's current cash flow is simply not enough to maintain the same dividends and pay for fab expansions in the US and Europe. Now, here's the most important question many investors want to know. Can Intel turn around within 5 years and start generating consistent free cash flow again without relying on external financing? This is my opinion here. I believe it will be extremely hard for Intel to turn around within 5 years, mainly because of Intel's execution issues, which have been Intel's biggest problems for many years already. Intel is facing a lot of competition from AMD, TSMC, and the companies that are making ARM-based processors. In my opinion, compared to Intel, AMD's management is doing a much better job executing their product roadmap and releasing their products on time. Also, TSMC is at least 1 generation ahead of Intel in process technology and much ahead of Intel in mass manufacturing of leading-edge chips. Intel CEO Pat Gelsinger said this in the latest earnings call. It shows that Intel has huge execution issues compared to its competitors. Q2 results were disappointing, below the standards we have set for the company and below the commitments we have made to our shareholders. The sudden and rapid decline in economic activity was the largest driver of this shortfall, but Q2 also reflected our own execution issues in areas like product design, DCAI, which is Intel's data center business, and the ramp of AXG offering. I want to show Intel's process node roadmap here. Intel is aiming to achieve 5 process nodes within 4 years. Also, Intel is aiming to achieve chip leadership again in 2025. This roadmap assumes Intel will have a perfect execution between now and 2025. Intel's management said this. Intel 4 is ready for volume production in the second half of this year, and Intel 3, 28, and 18A are all at or ahead of schedule. We remain firmly on track to achieve process performance parity in 2024 and unquestioned leadership in 2025. This goal is our true North Star. In closing, the market turbulence and updated outlook are disappointing. However, we believe our turnaround is clearly taking shape and expect Q2 and Q3 to be the financial bottom for the company. In my opinion, when Intel says that they're on schedule or ahead of schedule launching their new products, or they believe that they will achieve unquestioned chip leadership in 2025, or they expect that they have reached the financial bottom in Q2 or Q3, I believe it's much better if we take Intel's commitments as a grain of salt, mainly because Intel's management has been very poor in executing their product roadmap many times already. For example, under Intel's previous management, Intel had delayed their 10nm process node or Intel 7 for desktop CPUs for many years. This is why Intel has now fallen behind AMD and TSMC. Now, under the current management, Intel is delaying their next-gen data center CPU Sapphire Rapids to 2023 because Intel has found 500 bugs that need to be fixed first. In comparison, AMD will be releasing their next-gen data center CPU Genoa in late 2022. This means Intel will lose more server market shares to AMD in the upcoming quarters in 2022 and 2023. I said this earlier, Intel's process technology is at least 1 generation behind TSMC. Also, Intel is far behind TSMC in the mass manufacturing of leading-edge chips. TSMC is the largest pure-play semiconductor foundry in the world and has the largest chip manufacturing capacity. According to this article, TSMC has more than 50% of the foundry market share in the world, especially leading-edge chips. The second largest chip maker is Samsung. All the major tech companies, including Apple, AMD, Qualcomm, Broadcom, Nvidia, MediaTek, and even Intel, outsource to TSMC to make their most leading-edge chips. For example, Intel's upcoming 14th Gen Meteor Lake CPU will be mostly made using TSMC's processors. Intel knows that TSMC is at least 1 generation ahead in process nodes and knows that TSMC is far ahead in mass manufacturing of chips. Otherwise, why would Intel outsource its chip making to its biggest foundry competitor, TSMC? This from Morningstar, it shows that Intel's competitive advantage and economic moats are expected to decrease over time. We're lowering our moat rating for Intel to narrow from wide, as we're no longer certain that the firm can generate excess returns on capital over the next few years. We still believe Intel possesses cost advantage realized in the design and manufacturing of cutting-edge microprocessors and intangible assets related to its x86 instruction set architecture license and chip design expertise. However, we believe Intel's cost advantage has eroded as it faced significant product delays associated with its various 10nm process technologies. Intel's x86 rival AMD and its foundry partner Taiwan Semiconductor Manufacturing or TSMC have combined to leapfrog Intel in cutting-edge processors. In return, in recent years, Intel has lost market share considered on pricing and faced a sharp decline in gross margins and returns on invested capital. We believe that it is more likely than not that Intel can close the gap with TSMC and AMD and generate excess returns on capital over the next decade, but this is no longer a certainty, and we consider Intel's manufacturing inferiority to TSMC and AMD will persist for the next year or two and perhaps longer. So is Intel stock a value trap? In my opinion, I believe Intel stock is likely a value trap even if Intel stock appears undervalued and even if Intel stock has a very high dividend yield above 4%. Now to be fair, Intel stock would not be a value trap if Intel's current management can turn around the company over the next 5 years. If you're investing in Intel, you're essentially betting that Intel's management can turn around the company over the next 5 to 10 years. Personally, I believe it will be extremely hard for Intel to turn around over the next 5 years because Intel will need to have a perfect execution to achieve 5 process nodes in 4 years and not have any more product delays between now and 2025. Intel's management said that their Intel 3, 20A and 18A are all at or ahead of schedule. For example, Intel's announced that their most leading-edge 18A process node is ahead of schedule and will enter volume production by the end of 2024. Intel will be using ASML's most advanced high-NA extreme ultraviolet EUV lithography system first before TSMC. In comparison, TSMC's equivalent N2 process node is expected to enter volume production in 2025, which is later than Intel's 18A process node. Again, this assumes Intel will have a perfect execution between now and 2025 and not have any more product delays. Even if Intel can achieve 5 process nodes within 4 years, which is extremely hard to pull off, Intel will not have the same manufacturing capacity as TSMC. Most clients including Apple, AMD, NVIDIA, Qualcomm, Broadcom, and MediaTek will still rely on TSMC to make their most leading-edge chips. In the long run, I believe the best case scenario for Intel is that it will become the 3rd largest semiconductor foundry in the world after TSMC and Samsung. Also, if China invades Taiwan, it will disrupt the entire semiconductor supply chain. Many companies will want to outsource more chip manufacturing to Samsung and Intel in case China invades Taiwan. I believe the worst case scenario for Intel is this. If Intel continues to lose more market shares to AMD and TSMC, Intel will need to spin off its chip-making operations and focus on designing chips. This is very similar to how AMD spun off Global Foundry many years ago to focus on designing chips. So what is my strategy going forward? Personally, I don't have any positions in Intel stock. I'm not planning to invest in Intel no matter how cheap Intel stock is or how high Intel's dividend yield is. The main reason is that I believe it will be very hard for Intel to achieve 5 process nodes in 4 years and have a perfect execution between now and 2025. Execution is Intel's biggest issue. Instead of betting on Intel to turn around over the next 5 years or longer, I'm investing in ASML, TSMC, NVIDIA, and AMD instead. I already have ASML, TSMC, NVIDIA, and AMD in my portfolio here. This is one of my personal portfolios. I'm planning to invest in Applied Materials in the upcoming months when it becomes more undervalued. I will likely make a video about it. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. It's important to always invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.